Adani Ports reported their Q2 numbers, and the revenue and the PAT were in line with expectations, and the margin is actually a beat compared with consensus estimates. And Ashwani Gupta, whole-time director and chief executive officer of Adani Ports, had this message speaking about the Q2 earnings. Listen in.
Good afternoon, and thank you for allowing me to share APSEZ's performance for Q2 and the first half of FY26. Let me start with our financial performance. Our Q2 net profit reached rupees 3,120 crores, up 29% year-on-year, while revenues hit rupees 9,167 crores, growing 30% from last year. For the quarter, EBITDA stood at rupees 5,550 crores, showing 27% improvement. What makes these results particularly meaningful is that we are seeing strong contributions from every segment: ports, logistics, and marine. Now, let me give you a concrete sense of how our integrated transport utility strategy is taking shape on the ground. Our domestic ports delivered the highest ever H1 FY26 EBITDA margin at 74.2%. And H1 FY26 international ports revenue and EBITDA hit lifetime high of rupees 2,050 crore and rupees 466 crore respectively. Our logistics business achieved 92% growth with H1 revenue at rupees 2,224 crore, driven by our asset-light revenue comprising of trucking operations and recently introduced international freight services, and the network impact of pan-India physical assets comprising of multimodal logistic parks, warehouses, rakes, and agri-silos. But here's what excites us most. Logistics return on capital employed jumped to 9%, up from 6% in FY25. We are not just growing, we are building genuine efficiency and profitability. Our marine operations tell a similar story. We grew 213% to rupees 1,182 crore in H1, acquired 12 vessels, bringing our fleet to 127, and expanded into West Africa waters. I want to highlight three areas where we have made particularly strong progress. First, we are investing strategically in growth in line with our 5-year CapEx plan. NQXT in Australia, Dhamra Port expansion, Vizhinjam Phase 2, Kattupalli expansion, Colombo Phase 2, rupees 600 crore investment in 1.3 million square logistics parks in Kochi, and marine vessel acquisitions are key growth levers for us in the future. Second, our various operational efficiency and capital optimization initiatives are delivering strong results. During H1, we delivered the highest ever domestic ports margin. Our H1 international ports margin increased by 907 points, and we are significantly enhancing the capital efficiency of our logistics business. Third, and this is something I'm personally very proud of, we are leading on sustainability. 12 of our ports are certified zero waste to landfill. S&P CSA ranked APSEZ amongst the top 5% of the companies globally in the transportation sector, and we remain committed to net zero by 2040. For us, sustainability isn't a separate initiative. It is built into how we operate on every single day. When you look at the scale we have built, you can see the integration of our services are